Hi, in this second part I'm going to go through the second question on the assessment paper that looked at the cash book. It was also a question that retested you on your double entry. Okay, so Liam Fortune sells painting and decorating materials from a number of retail outlets. So Liam Fortune is who we are accounting for. He is our client. The following balance was owed by Mitchell at the 1st of November 2012. So what I want to ask myself is, who is Mitchell to Liam? Now, if he's in Liam's sales ledger, that means Mitchell is a trade receivable. Okay, so that's so important because that's going to help me label my accounts. We can then see the following transactions took place. So we sell goods to Mitchell Limited, we sent a credit note for goods returned by Mitchell Limited, and we received a cheque in full settlement of the opening balance. Okay, and we can see there's two different numbers, so that's going to be important, but we'll come back to that in a minute. So what we're being asked to do in this question is record all of the above info in Liam's cash book and in the sales ledger account. So like I would in any other ledger account question, I'm going to start off with my labelling. Okay, so first of all, cash. Cash is an asset. So if we are debiting the account, it means cash is increasing. And if we are crediting the account, it means cash is falling, cash or bank. Okay, and then we've got the sales ledger account. So we know if he's in a sales ledger, Mitchell is a trade receivable. So this is an asset account again. If we are debiting, that means the trade receivable owes more to Liam. It's a good thing. Okay, and if we are crediting, it means the trade receivable owes less. So please don't forget to take a step back and think about your labelling. It can direct you, or it will direct all of your entries. It's so, so important. Okay, so first of all, I can see that at the very top of this question, we're told that that at the start of November, Mitchell already owed this business £440. So this is our BAL BD. Now, because we're in an asset account, this is going to be a debit BAL BD. Okay, debits, assets. So all I'm going to do is at the start of the month, so 01 of the 11th, the 1st of November 2012, we've got a BAL BD of £440. Oops, I'm in the wrong place there. £440. Okay. The next thing we can see, the following transactions took place in November. So on the 3rd of November, we've sold goods on credit. Now that is not going to affect the cash book whatsoever because it's not a cash sale, it's a credit sale. Okay, so we've sold goods on credit to Mitchell Limited. So I'm going to go to the Mitchell Limited account and I'm going to think about, is this good? Does this mean the trade receivable Mitchell owes us more or owes us less? And obviously, if we've sold to him, he owes us more. So on the 3rd of the 11th, we're going to debit £610. Now the other account involved is the sales account. And what you can do in your margin, just to make sure you have got a debit for every credit, is you can draw out your sales account. Okay, I'm going to write pearls here again so you can see. We have lost the inventory, so we would credit the sales account, but we have gained a trade receivable, so we would debit the asset accounts. For every debit, there would be an equal credit. Okay, on the 12th of November, we sent a credit note for goods returned by Mitchell Limited. So if Mitchell has returned goods, that means Mitchell owes us less. Okay, so I'm going to put returns inwards. Okay, also known as sales returns. And that means Mitchell now owes us £55 less. Now what some people try to do is put this into the cash account as well. The reason I'm not doing that is up until this point, Mitchell has not actually paid us any money whatsoever. He bought from us on credit and then he sent goods back to us. He is sending these back before he's actually paid us. So cash is not affected because we're not going to give him any cash back. Instead, he just owes us less when he does actually pay off the amount he owes. Okay, and then on the 22nd of November, this is when Mitchell actually pays us. He receives a cheque, or we receive a cheque, from Mitchell in full settlement of the opening balance. Okay, so in full settlement of this £440. But what we can see here is that it's in full settlement, but those two numbers do not match. The reason this will be recorded as a full settlement is we must have given, okay, so we've allowed a discount of £32. Not 32. £22. Sorry about that. Yep, just doused myself there. Okay, right, so what I want to do then is record both of these in Mitchell's accounts. Okay, so I'm going to first of all start off with the cheque that we received. So we have received a cheque of £440. So that means Mitchell owes us less. So what date was it? The 22nd of the 11th, the 12th. Okay, received a cheque from Mitchell. Okay, so if it's a cheque, it's going to go into the cash book of £418. I'm recording that £418 because that's the amount that was physically on the cheque. That's the amount of cash that's been paid in. Okay, so I'm now going to record this in. Okay, so I'm now going to record this in the cash book. Okay, so cash is increasing by £418. The cash was received on the 22nd of the 11th, and the other account involved is Mitchell. That's who's given us the cash. Okay, and we also have a discount that should go next to this, a discount allowed, okay, of £22. And now actually need to record this discount, okay, in the sales ledger account. Remember at this point, this is a subsidiary book, so just for the discount, this actually hasn't had any entry into double entry yet. Okay, so what I'm going to do is on the 22nd of November, Mitchell also owes us less because we have given him a discount. We've allowed him a discount for early payment. We've allowed him a cash discount. Okay, of £22. Now what I'm going to do is I'm going to balance the accounts, okay? Now, in fact, actually, in this question, all it tells you to do is balance the sales ledger account. If it didn't tell us, we would do both. But this question is also only worth 2 marks, 1 mark, 2 marks. So we don't actually need to balance this account in this question, okay? It just tells us in this question to balance the Mitchell account. So that's what I'm going to do. Okay, so if I look at my numbers, I can see that the debit side is worth more. So all I'm going to do, okay, 440 plus 610 equals 1050. So that's my total going on both sides. I now need to find out what my BAL CD is going to be. So I'm going to do 1050 minus 55 minus 418 minus 22, which gives me 555. Okay, and then for every BAL CD at the end of account, we have a BAL BD. Please make sure you always put your BAL BDs in. Okay, it's the first of the next month, because often this is where the mark is awarded. Okay, so at the end of this month, Mitchell owes Liam £555. Now, it would be a good idea, because at this point, to pause the video and to have a fresh go at this by yourself. Okay, make sure you label and you work through it logically. Those would be my tips. Now, the final part of this question and this paper was to do the double entry account for the discounts. Now, because this is a trade receivable, the discount involved is a discount allowed. We give discounts to our trade receivables. Okay, now I'm therefore going to label this account just as always. Discounts allowed are expenses. So that means this is going to have to be entered into the debit side of this account. Okay, the other entry, I'm getting this info from the cash book, and you can see it's excuse me, in the cash book it's £22. Okay, now remember in the cash book it's not yet in its double entry, this is its subsidiary book. Okay, so I'm listing this information out. I've done my credit in the Mitchell Limited accounts, I'm doing my debit in the discount allowed accounts. Okay, I can't remember the dates. Oh, the 22nd of November, luckily it's given it to me, 22nd of the 11th. I've taken the info from the cash book, and the amount was for, I can't remember, was it 22? Yeah, £22. Again, this question isn't asking me to balance it. Okay, if it was, what I would want to do, in fact actually I should do this already, I should do this anyway, is at the end of the month I want to transfer, end of the year I want to transfer this to the income statement. Okay, so I'm going to do the 22nd, sorry, the 31st. Okay, you have to excuse me, I'm not very well today, my brain isn't working very well. Okay, it's going to get transferred to the income statement, assuming that is the end of the financial year. If it wasn't, we could just bring it down. It doesn't actually ask us to do this in this question, but it's just to demonstrate how it will be done. The final part, again, is just testing your revision. So state two differences between cash and trade discounts. You did do a director's study on this, and you do have in your workbook, I'll actually get the pages for you now, okay, information about the differences between cash and trade discounts. Okay, pages 88 to 89, so use those to help make revision. So two differences. So I'm going to put my first difference, you should write this up in full sentences, I'm just demonstrating here, okay, is that cash discounts are recorded in the books, i.e. in the cash book, whereas trade discounts are not. Now, if you are being to state two differences, you must compare. If you just put this and not mention the trade discounts, I wouldn't award you the mark because you're not stating a difference. Okay, now the reason for that is actually going to lead in to my second reason. The reason cash discounts are recorded is because cash discounts are given to encourage early repayment. So we can give them to our trade receivables to help to encourage them to pay on time and reduce the likelihood of a bad debt. Okay, or we can receive them from our suppliers who, again, are doing it for a similar reason. They're trying to get us to pay. Okay, and that's why they are recorded in the books, because this happens after the agreed sale. Okay, so these are only given once payment is received at a later date, so it needs to be recorded in the books when that happens. Trade discounts are not, because trade discounts are agreed at the time of sale. They are given for, like, as a reward for bulk buying, okay, for people trading in the same industry to try and get repeat custom. So cash discounts are given to encourage early repayment, whereas trade discounts are given to encourage, or reward if you like, bulk buying, so buying in large quantities. Okay, other differences you could have is that these are often smaller percentages and these are larger percentages. Okay, but if you need to look at this more, pages 88 to 89 of your book.